Hey, if you're looking to start a dispensary and need a set of financial projections for a potential investor or lender, then you've come to the right place because we have built a financial projection template built specifically for dispensaries. And I'm going to walk you through how to use this template, how to fill it out, and create a set of 5-year financial projections. But first, my name's Adam Huxama. I'm the co-founder of ProjectionHub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders in all sorts of different industries and businesses. But today, we're specifically focused on our dispensary template. And you'll be able to follow along and go grab this template. There's a link in the description of the video below where you can purchase a template. And if you stick around to the end of the video, I'll point out how you can get a coupon code as a thank you for watching the video. That way you can get a discount on that purchase at checkout. All right, with that out of the way, let's go ahead and dive into how this template works. Okay, so we're starting on the at a glance tab, and this is kind of the end of the process. After you've filled in your revenue and expense assumptions and startup costs, you will be able to see a 5-year forecast, a profit and loss at a glance here, some key summary data, and graphs and charts, ratios, some different graphs to show the use of funds, how you're going to use the startup funds, some key ratios like total employees, annual revenue per employee, customer visits per day, and that sort of thing. So lots of key useful information in the model here. You'll also get a 5-year income statement summary, 5-year cash flow summary, and 5-year balance sheet summary, as well as an income statement, cash flow, and balance sheet report, all broken down by month. So you get both the annual summary and the monthly inputs as well if you need that level of detail. But in order to produce all these reports, we have a little bit of work to do. So we've got to go back to our input assumptions tab here. And the first thing you want to note is that any cell highlighted in blue is an assumption that you can change. So we're going to say, let's start this business on January 1st, 2023, and equity, we're going to invest $300,000, or we're looking for investors for $300,000 in initial equity investment. You can add inventory assumptions, so some initial beginning inventory balance, the average inventory that you'll carry as a percentage of sales. So if we say 100%, that means basically you have 1 month worth of inventory on hand. You can add in your fixed assets. So let's say you maybe you leased a building and you spend $150,000 on leasehold improvements for the dispensary facility. You got $20,000 in furniture, $10,000 for a safe, and $2,500 for signage. And maybe you're also going to get probably not an SBA loan for a dispensary, but let's say you're going to get a loan for $50,000 as well. And maybe we'll make this a 8% loan. All right, so then jumping over to our input revenue tab, the way this is built out is that we assume you have some sort of advertising budget. And we'll set up this advertising budget, and then we have a customer acquisition cost. So what do we think it will cost in advertising in order to get one customer to come in the door? And so we're saying a $10 customer acquisition cost, and we're saying that has actually a negative growth rate. So we're thinking that, hey, maybe over time we're going to be able to decrease the customer acquisition cost over time. Maybe it also increases, so you could, maybe it's harder and harder to find new customers over time. So maybe we should increase that to a positive 5%. That means that cost will go up over time. We'll also have new customers from non-advertising or organic sources. And so maybe initially we're getting 750, 1,000 people a month new potential customers coming to our store. But then over time, maybe this is also going to go down because after a while, everybody that has heard about our business has come and checked us out, and it gets harder and harder to find new customers coming in. Now, some percentage of those new customers are going to become regular customers. And so maybe we assume 10% will become regulars. And of those regulars, 30% of the regular customer base that you have will leave or churn each year. So we have an annual churn rate, and that could just be folks find a different dispensary, or folks just stop buying the products that you offer or move away. Any possibilities there, but we have a 30% churn rate we're assuming here. And then that will allow you to project your regular customer visits and your total customer visits per month. And from there, we can start to project revenue. So we're going to say we'll sell products sold by weight, and then also products sold by each or by unit. So first you have this table where you can enter in your products that are sold by weight. You can break down, what percentage of your total sales each one represents, the average revenue per ounce, and the average cost of the product. And the same thing with the products sold by unit. Break down the percentage of sales, average revenue per product, and the cost. And that will allow us to project our total revenue. I should mention up here actually average ounces sold per customer visit. So up here we are seeing our total number of customer visits, and then we're saying that on average, the average customer that visits is going to purchase 0.2 ounces and 0.1 units. So in other words, 10 people out of 100 customers are going to buy a unit-based product. So hopefully that makes some sense. Now, this will give us our total revenue here, and now we can move on to our operating expenses. So we've already entered in our advertising on the other tab. I'm going to zoom in just a little bit more here. Now we have our expenses like accounting, point of sale services, transaction fees. Now you can set these transaction fees as a percentage of total revenue as well. And so we've got this set up as 0.8% or 8% of total revenue as a expense, and that could be because of the industry that you're in. Maybe you have a high payment processing cost, but you can adjust that to whatever your specific cost is going to be. You can also add things like rent, utilities, internet, phone, repairs and maintenance, all those sorts of things based on your specific situation. And then we can add in staffing. So managers, supervisors, hourly employees, you can add in the month that they would get started, the month that they would end. So month 60 is the end of the model. And you can enter in the number of each particular employee. So for example, here we've got 3 hourly employees here, all starting in month 3 because that's right before the dispensary opens. Month 4, I believe, is when we said the business was going to actually open in stores. So yeah, we're going to start these hourly employees in month 3, and we have 3 of them. And once you've entered in all those assumptions, you're kind of back to where we started here, and we can see, based on those assumptions, what our profitability, total revenue, and expenses would look like. So if you have any questions, please don't hesitate to reach out or leave a comment in the description of the video below, or in the comment section below. And then, as I mentioned, thank you for sticking around to the end of the video. As a thank you, we can provide a coupon code. So in the description of the video below, there will be a couple different links. One, a link to this template so that you can purchase a template. And secondly, a link to a form where you can fill out that form, and we'll send you our most up-to-date coupon code. And we'll email you that coupon code that you can then use during checkout to get a discount as our thank you for sticking around for the full video. With that, best of luck as you get started. And if you have any questions at all, please don't hesitate to reach out. Thanks.